Well, hey, deal makers, welcome to the show where it's all about financial freedom with real estate. Let's do this. All right, today I'm wrapping up our Freedom Accelerator series with the final step, joining the right network. Because in this episode, I'll show you how connecting with the right people can be the ultimate game changer for your success in multifamily real estate. It's really how people do bigger deals faster and joining the right network. I'm going to talk about how that's possible for you to get access to deals if you're looking for deal flow, how to get access to capital if you're looking for capital, and partnerships that are hard to find on your own. So if you missed the first two parts of the series, be sure to go back and check them out. In part one, we covered the right system, following a step-by-step approach to building financial freedom through multifamily, something that's already been proven by hundreds of different people over different market cycles. And then in the previous episode, we talked about the right supports, the importance of surrounding yourself with mentors and accountability putters, getting your spouse on board, things of that nature. So today's episode brings it all together, showing how the right network will speed up your journey to financial freedom. And before we get that, I want a huge shout out to Chris van der Weert. Chris is one of our deal makers in our program, and he recently closed his first multifamily deal, a 52-unit property in Charlotte. He came from a long career in sales. He had 10 years in sales in craft beer. I love him already. But he needed a path to financial freedom, an accelerated path. So he read our book, Financial Freedom with Real Estate Investing, on Amazon, joined the program, dove into multifamily, and really hasn't looked back. So he worked with one of our mentors, Brad Tasha. He made some connections in our Dealmaker network, which we're going to talk about today, and put together a great team and close on this deal. So congrats, Chris, on that. If you want to explore working with us to help you scale your real estate investing, check us out, themichaelblank.com/call. It's just a 20-minute call just to explore what it's like to be working together. So check that out when you get a chance, themichaelblank.com/call, and maybe talk about helping you accelerate your journey to financial freedom. So with many things in my life, I'm going to show you what not to do, because I am indeed the crash test dummy of real estate investing. And then I'll talk about what we actually learned since teaching this since 2014, about a decade, of what you actually should do to greatly accelerate that. So this is an example of what not to do around not having the right network. So in 2006, I took a commercial real estate investing boot camp. This was a year after I read Rich Dad, Poor Dad and quit my job. And I really learned everything I could about how money works. And this is one of the things I did. I took a commercial real estate investing boot camp. I learned how to trade stocks and options. I flipped a house. And of course, my big idea back in the day was to get into restaurants. That was my actual plan. In 2006, in April, I opened up our first pizza restaurant. But I also did this on the side. I'm a learner at heart. And so this is one of the things I did. And for about 6 months, I actually called on brokers in Texas. So the market apparently was good in that time. I don't know. So I started calling on Texas. I even sent yellow letters per my single family house investing days. That's what apparently worked. None of that worked, because I'm trying to apply my single family house tactics and mindset to multifamily, and I really struggled with it. But I did call on brokers back in 2006 for about 6 to 9 months. And I had, at the time, flipped a couple houses and had one rental, so I felt like I was a fairly accomplished real estate investor. So at first I used what I thought would work, and I would look on the MLS and didn't really find anything. There's really nothing on the MLS, so that's odd. And then I finally, after a couple months, I was like, oh, there's this thing called LoopNet. Even in the day, LoopNet. And I was like, great, look at all these properties. And so I started calling on them, and it took me another couple months to figure out that actually none of those deals worked. And then after 4 months of this, basically at the time, I finally calling brokers. I'm like, oh gosh, I need to be talking brokers. And they weren't taking me seriously. I would call them up and say, hey, I got a couple flipped rentals. Can you send me some deals? And they're like, well, how much apartments have you done? I said, well, I haven't, but I've done some real estate. He goes, well, I'll tell you what. Why don't you send me your proof of funds, and I'll send you some deals. And they basically now know they say these things to make me go away, because they weren't taking me seriously. I didn't have an apartment investing track record. And I was like, well, how do I get into the game? How do I get into apartment investing track record game without a track record? And it was super frustrating. And again, I finally learned how to do it. And that is through networking and building a team. And so imagine, and I did not do this. I gave up. I literally gave up. I put the whole thing on hold because I was getting super in a restaurant. So I never actually got to do this back then. So I really literally failed because of this. But what I know now is you really have to build out your network. And so there's different networks to build out, but specifically you got to build out your network of professionals. Imagine if I had recruited a property management company and recruit a lender. And now I call that same broker and I said, hey, I'm working with Sam. They manage 5,000 units in there. Oh, Sam's a good guy. Done a bunch of business. Yeah. And I'm working with Bill over at XYZ and originated $1 billion worth of loans. Oh, Bill, yeah, good guy, right? And now I'm talking about my team's collective experience. And the broker never asked me about my personal experience because it doesn't matter, right? I must be a serious person if I can assemble a serious team around me. And that's really the secret of building a network, is to be able to break into this game with credibility. So when I did this 12 unit in 2011, when I accidentally got into it, so I flipped 3 dozen houses from 2009 to 2011, 12. One of my wholesalers brought me this deal, and I struggled with this also. Right, I really struggled to find capital. I thought I was using hard money loans in the beginning. Then I started borrowing money from private individuals, 6 months notes, and then I was like, oh, I'm going to do this 12-unit deal. I thought it would be pretty easy to raise money, but it wasn't. Right, they really liked the 6-month hold. They didn't like a 5-year hold. Like, that's totally different. So they really weren't investing with me. So I struggled to find capital, right? And you might be like, well, that's because you didn't know how to raise money. That's true. But what I'm getting to point is I also didn't have the right network that had capital in it. Right? I had the wrong property manager, and that's because I wasn't in a network of property managers. I wasn't even in a network with the right kind of support in there. I had a lender who literally 10 days before closing pulled out. I didn't have the right lenders in my network, right? And so the value of a network is very, very valuable, is to have that, and I didn't have that. And I just made one mistake of another because I did not have this kind of network. Here's another example of the lack of a network. In 2018, I had a 46-unit deal under contract in Birmingham for $1.7 million. Needed to raise $650,000. Now, I got started with this in 2014, started a blog, and then published a book in 2018 as well. So I had a bit of an email list and maybe a bit of a reputation, a good one, I hope, right? And so I felt like I'm going to send an email out and have this $650,000 raised lickety split. And I struggled to raise the $650,000. It was a smack in the face. And then after that, I learned about joint venture partnerships. I learned that there is such a thing as capital raisers out there who have access to capital and were looking to bring their investors into a general partnership. And their biggest problem was deal flow. 2019, a year later, we raised $3.2 million. Now, how can I go from barely raising $650,000 to raising $3.2? And it's because with a joint venture partner. And we ended up closing on a 224 unit in Memphis worth $9 million, which was staggeringly profitable, that deal, even with a joint venture. And today I know, and here's the message, the key to scaling your real estate investing is to build and leverage your network. That's it, right? And so since then, since I finally I'm a slow learner, I've networked, I've attended real estate guys. I put on my own event called Dealmaker Live. I went to Croatia with a high-end mastermind. I spoke at a conference in Dubai. Went to New York City. I'm in part of a GoBundance mastermind with a bunch of high net worth entrepreneurs, right? So I've learned to network a lot more. And from that, a lot of opportunity has come. And today, we've purchased over 3,000 units with about a half dozen exits. And raised $95 million. And in fact, we just launched our Fund to Funds program to open up our investment company, Nighthawk Equity, to fund managers and capital raisers. Check it out at nighthawkequity.com/fund. If you're actually a capital raiser, would love to have you be part of our deals here. And again, it's opening up the network. And this is really what I want to talk to you about here, is that many new investors never connect with the right network. And as a result, they don't have access to deal flow. They can't raise enough capital, and they can't meet partners who can help them get ahead. And so as a result, they struggle with getting a deal done like I did. Or they do a small deal and it takes too long to scale. But people who do bigger deals faster, what they do right is they join the right network. And that is Freedom Accelerator number 3. So really, you got to join the right network because partnerships are the key to scaling. It gives you access to capital, deals, and partners. Now, let me give you an example of why partnerships are so important to scaling faster. So there's the story of Andy Vaughn and Seth Robinson, and they're both mentoring students of ours. But Andy Vaughn wanted to get to his first deal done, and it's pretty cool, but he struggled with underwriting and spreadsheets. And we determined this after a while. Hey, Andy doesn't really like spreadsheets, not really good at it, but he loves to network. He's got the gift of gab. He has no problem talking to strangers. He loves playing golf. He has an insurance background, a bit of a sales background. Okay. So there was a bit of a mismatch, it appears, and Seth Robbins had a bit of an opposite problem. And this was a while ago, and he was a former engineer, so underwriting was easy for him. He can have intelligent conversations with brokers. He was very detail-oriented, but he struggled to raise money. And so they had this deal, it was a 36 unit that he had under contract, and Seth struggled with raising this, so we put the two together, and magic happened. And he was like, finally, I have a deal, and he raised the rest of the money, and they closed this deal together, and Andy went on to do another 3 transactions, raising $760,000 in the next 14 months. And without all joint ventures, he wouldn't have done a single one of those deals, and the other partners wouldn't have done a deal either because they didn't have the capital. So in our world in syndications, the joint ventures is actually the norm. It's very rare that there's not a joint venture. And so there's really 2 main roles in a syndication, and it really depends on it's a deal finder and the capital raiser. It really depends on what your personality type is. And I kind of described Andy versus Seth a little bit. Maybe you recognize yourself to being one or the other. So which one you choose depends a little bit on you and your personality and your situation. So I'd love to ask you, which one are you? Deal finder or capital raiser? And this is important because as you build your network, it's important that you network with intention. If you know you're more of a deal finder, well, then you're really looking for a capital raiser. You don't want to have another deal finder partner, right? If you want someone to support you and commiserate with you, and that's fine, that's cool, then create like a mini mastermind, right? Create a group of 5, 6 other deal finders that you're together and you're meeting every other week, and that's pretty cool. It's more around the second accelerator, which is building the right support around you. That's really cool. But from a partnership perspective, don't partner with another deal finder. That doesn't work. If you're a capital raiser, your biggest problem is deal flow. And so again, you want to find deal finders. And so this is, when you do your networking, this is really, really, really important. So the value really is in a network. And you combine the values in your network with the principle of who, not how, right? This business is all about who's, and it's the value of the network. It's who you know, not what you know, right? And so just really pay, whether you're a deal finder or a capital raiser, you got to spend a 25% of your time networking. There's always something you need that you don't have, and there's a who that can help you get it, right? For example, just lenders, networking with lenders. It really, he who has the right debt wins. Continually network with brokers and better products and better brokers. Network, right? And network intentionally. Always follow up with people when you go to a conference, right? Leave a good first impression. Don't squeeze a business card into their hand, right? So, but follow up with them. Everyone you meet at a conference, don't push your agenda. Just be a little more casual, and then set up a Zoom call afterwards, and then spend 30 minutes together. There's way more you can do undisturbed in 30-minute Zoom call than you can at a conference just standing around, unless of course you're at the bar. Now that's a different story. So really spend time networking, but you also need to make sure you get access to the right network. That's the key, because at the end of the day, you want to get into a room or an ecosystem of some sort where you have access to capital. There's capital raisers in that room, and then there's deal finders in the room, depending on who you are. So make sure you check that box off as you're doing your journey. Just make sure that you get into an ecosystem like that. So if you want to do a bigger deal faster, if you really want to scale, then really pay attention and leverage these 3 freedom accelerators. Number 1, follow the right system. We talked about that. Follow a proven system. Don't reinvent the wheel. If you value your time, you want to get there faster and don't want to make big mistakes, and follow the right system. Number 2 is get the right support. Get your spouse and your family support. Get into a community of like-minded people. Make sure there's a coach or accountability partner, and then make sure you have an experienced advisor or mentor on your team. And number 3, join the right network to give you access to capital and deal flow. So we'd love to work with you. We'd like to help you scaling your real estate portfolio. If you're ready to take that next step in multifamily investing, you want personalized support, then book a free strategy call with one of our advisors at themichaelblanc.com/call. 20-minute call just to explore if there's a mutual fit here. We only take a very few number of people. We look for a certain kind of person, and you may be that fit, and we'd love to work with you. We're just really good at what we do, especially working with people who have previous real estate experience, or you already know that you're going to skip it and you want to go right into multifamily. We'd love to work with people with a growth mindset. If this is all a bit active for you, want to invest more passively, then we have some passive investing opportunities as well on the Nighthawk Equity side. This is our investment firm, so check that out. Go to nighthawkequity.com. Either way, we want to help you become financially free with real estate. So hope you found us inspiring. Go out there, leverage the 3 freedom accelerators, and here's to financial freedom.